All right, welcome to the video where I explain how to fill out the third-party financing addendum for an FHA loan. So there are a couple of extra steps when you're dealing with an FHA loan. So let's run through them. So if your client has an FHA loan, you're going to fill out paragraph 1C, and you're going to fill this out exactly as I have filled this out, with the exception of, obviously your loan amount will be different and the interest rate will be different. All right, but it says FHA insured financing. So this is by the government, as is a VA loan. We'll do that in another video. It says a section 203B, and that's just the code that the government assigns this particular loan. FHA insured loan of not less than, all right, and I put $190,000. So what is that number? That is the loan amount, all right, and this is derived from paragraph 3B of the 1 to 4 family residential contract. So you remember that section where it just talks about price. So 3A is the down payment. That's the cash. All right. 3B is the amount of financing. It's the loan. So in this case, it's $190,000. And then 3C adds up those two figures to get the sales price of the home. Okay, so that is the loan amount, right? Excluding any financed MIP, that's mortgage insurance, amortizable monthly for not less than 30 years. That's going to be a typical loan term. Yours might be different, but it's typically 30, with interest not to exceed whatever the interest rate is, okay, per annum, that's per year, for the first 30 years. Okay, of the loan, which origination charges as shown on buyer's loan estimate for the loan, not to exceed, in my example, 1% of the loan. So what is an origination charge? Well, it's a percent of the loan, not the sales price, but the loan, that the lender charges the buyer as a fee to lend them the money. Okay, it's all the administration costs and all of what they go through to write the loan. And so I've seen it be 1%, 2%, 3% sometimes. So if the loan amount is 190,000, the origination charge is going to be $1,900. Okay, so similar to a conventional loan, right? Except you're going to put in a little label here. And then don't forget about the interest rates. So all this is going to come in the pre-qualification letter of your buyer. It will say the interest rate, how much price of the home they can afford, and what the origination charge is going to be. Now, because it's an FHA loan, well, before we get to that, let's go to approval of financing. So this is the amount of time that the borrower needs to get qualified for the loan. So you might be saying, well, they already have a pre-qualification letter. What do they need that for? Well, the pre-qualification letter is really based on a very high level set of data that the borrower gives the lender in order to kind of, pre-qualify them for a loan. Doesn't mean that that loan is going to go forward. Okay, so it is now the time where the lender looks underneath the hood. They verify that they're really employed and they make whatever they say they make, and their debts are whatever they said they were, and that takes time. So I don't think that it should be less than 21 days. Some sellers agents will push back and say, well, can you do it in 14 or 7? I mean, that's dangerous, because if you can't get the financing, you're going to want an out. Right? So always check buyer approval. I would always put 21 days unless the seller really gives you pushback. So then that brings us to the property approval. Well, it's one thing to be able to get a loan, but if the property doesn't meet certain requirements for the lender, then it's game over. So what would those things be? Well, the most common one is an appraisal. So if the home is $205,000, and the bank sends an appraiser out, because the bank is not going to lend money on a home that is appraised at less than what the sales price is, and that appraiser determines it's only worth 190, well, that's going to be a problem. The loan's not going to go through. All right. Or it can't be insured. Maybe the roof is in horrible shape and seller's not going to replace it or whatever. Or what is common in an FHA loan are lender required repairs. And that might be just to make it livable, or it might be due to the fact that if the appraisal has to be met, then certain repairs have to be done. Now, the seller is responsible for making those repairs. And if the seller doesn't want to do them, then the contract ends. All right. So it's one of those three things, but not limited to. All right. So that is your out. And it says buyer not later than 3 days before the closing date may terminate this contract by giving the seller notice of termination. There's a form for that, right? We all know that. 2, a copy of the written statement from the lender setting forth the reason for the lender's determination. If buyer terminates under this paragraph, the earnest money will be refunded to the buyer. Okay. So again, the most common reason for a property not meeting a lender approval is the appraisal. All right. So, which leads me to my next point, which is paragraph 4, because the government's involved, and so the government is not going to want to take a whole lot of risk here. In paragraph 4, it says FHA VA required provision. If the financing described above involves FHA insured or VA financing, it is expressly agreed that, notwithstanding any other provision of this contract, the purchaser, which is the buyer, shall not be obligated to complete the purchase of the property described herein, or to incur any penalty by forfeiture of earnest money deposits or otherwise, unless the buyer has been given, in accordance with HUD, FHA, or VA requirements, a written statement issued by the Federal Housing Commissioner, Department of Veterans Affairs, or a direct endorsement letter setting forth the appraisal value of the property of not less than a certain dollar amount. Okay, which means this is the sales price you're putting in here. Okay, whatever the sales price was in paragraph 3C of the 1 to 4 family, that's what goes in there. All right, not to be confused with the loan amount, which is going to be a lesser amount, which is in paragraph C. Okay, so paragraph C is the loan amount. Paragraph 4 is the sales price. All right, so it's just basically providing that if it doesn't meet appraisal, then it's over. Okay, and that's pretty much it to filling out the addendum, third-party financing addendum, if you have an FHA loan.